Live from Dubai today, this is Bloomberg Daybreak Europe. I'm Joanna Bersecci with your top stories. Oil heads for its biggest weekly gain since the first week of the war as Iran keeps the Strait of Hormuz closed and U.S. forces board a supertanker carrying Iranian crude. Intel shares soared 20% after hours, powered by a blockbuster sales forecast that smashed estimates. But Bloomberg learns Meta and Microsoft are planning as many as 23,000 job cuts to fund their AI plans. Plus, joining the club, we're told that talks on Ukraine's accession to the EU could get underway in the coming weeks and months. Let's get you up to speed on these markets. It's the final trading day of the week. S&P futures not doing a whole lot. We are treading on water, though I will say that yesterday we had, a bit of a dip for Wall Street, but for the month as a whole, S&P is looking at its best month since 2023. So it has been quite the comeback story over the course of the last month. NASDAQ also, take a look there, up 0.4%. This being boosted by chip makers, one in particular, Intel, trading higher than 20% in extended trade. Very solid set of results coming through from Intel. We will discuss that on the show. European markets, though, dipping a little bit today, down about 0.2%. Remember, we had a data drop yesterday. Those PMI numbers really disappointing to the downside for European markets. So weighing there on European prospects as we think about the persistent pressure that's coming through on the energy side of things. So speaking about that, Brent is trading at 105.5, up 0.4% this morning, but still notably in triple-digit territory. USD getting a bit of a bid. We are up 7 basis points today in trading, given risk-off and perhaps some cautiousness as we head into the weekend. And then 10-year yields not doing a whole lot here, but I will say that the trend for the U.S. curve has been one of flattening in the last couple of weeks. Now, in terms of risk events to watch out for today, 7 a.m. in about an hour's time, we got UK retail sales figures. 9 a.m., you get the German IFO survey. It will be interesting to see what businesses and consumers have to say about the outlook and expectations, especially after those weaker than expected PMI numbers that came through yesterday. And then in the U.S., we've got University of Michigan sentiment, and there equally we're watching out for how U.S. consumers are feeling about the state of the economy with the backdrop of higher energy prices. So that is at 3 p.m. UK time. And with that, let's get the show started. All right. Well, we talked about some cautiousness for U.S. equities. Let's see how Asian markets are faring as well with Avril Hong in Singapore. Avril, walk us through some of the price action today. I see it's a bit of a mixed bag.
It is very mixed. There is clear divergence. On the region's benchmark, you're actually seeing more losers than winners, but the benchmark itself is in the green because it's helped along by a handful of stocks. The AI trade there is loud and clear. You're seeing the TAIEX. The outperformance is also there, and this is thanks in part to Taiwan easing some of the single stock investment caps. So that's propelling the chip stocks like MediaTek, TSMC even further. Now flip the board because I also wanted to talk through the market reaction to DeepSeek unveiling the preview versions of its latest V4 AI models. And this is the biggest upgrade in a long, long while. And essentially, as you'll recall, more than a year ago when DeepSeek was unveiling its models, it caused this rethink on Silicon Valley and a $1 trillion Wall Street wipeout. This time around, the market reaction seems to be confined more to China. If you're taking it at face value on what the Nasdaq futures are pointing at, you're seeing this divergence too in Chinese-related stocks, right? The hardware names for AI, such as your chip makers, Hua Hong, SMIC, those are doing really well today on the back of their unveiling by DeepSeek. But it's the rival AI model providers that are underperforming and dragged lower. Flip the board again, bonus eco chart for you out of Japan as we got CPI numbers excluding fresh food. If you take a look at that, acceleration for the first time in 5 months. So price pressures are building, and that's being shown by this key inflation gauge in Japan. But BOJ next week, consensus is for it to stand pat amid this Middle East uncertainty. And you're seeing that reflected in the weakness still on the Japanese yen, around 160 against the greenback still. Jumana?
Avril, thank you so much. And we love a bonus eco chart always. Keep them coming. Avril Hong in Singapore. Well, oil prices rose for a fifth day as uncertainty over talks between the U.S. and Iran threatened to further delay flows from the Persian Gulf. President Trump's orders to shoot and kill mine-laying vessels and the blockade of Iranian ports have raised concerns that the peace talks have stalled. Trump brushed off concerns about the duration of the crisis.
How long are you willing to wait until you get a unified response?
Don't rush me, Jeff. Guys like you want to say, oh, so we were in Vietnam like for 18 years. We were in Iraq for many, many years. We're in for I don't like to say World War II because that was a biggie, but we were 4.5, almost 5 years in World War II. We were in the Korean War for 7 years. I've been doing this for 6 weeks.
Stuart Livingstone-Wallace, our head of Middle East and North Africa, joins us now. We're just listening to some comments there from President Trump suggesting that we could be in the early innings of this war if you go by U.S. history. But that aside, I would say, one of the main questions that people are asking is where we go from here. And is there a chance of some form of a diplomatic breakthrough in coming days, do you think?
I think there's a chance, for sure. I think the previous signs of a breakthrough sort of came out of nowhere. So there's a lot of this stuff is being back-channeled diplomatically, and, we get to find out about it after the fact, usually. We shouldn't give up hope. However, having said that, the context here is that, in effect, there's been some sort of hostility between the US and Iran since 1979. This has been going on a long while. We saw, it turned kinetic last year. It's turned kinetic again this year. Yeah. What that breakthrough might be is really hard to tell. In effect, they seem to be in a war of attrition right now in Hormuz, with both sides taking each other's tankers and other ships, threatening each other. It's going to have to get to a point where the economic pain, I think, and the political pain for both sides is so high that they're going to be forced to the table.
Yeah, if I had to summarize the state of the Strait of Hormuz right now, it is effectively shut and effectively still dangerous. Yeah. Is that what is keeping oil prices elevated here? Yeah,
exactly right. And the prospect of how quickly that can be fixed. Mm. But not just that, also looking at the damage that there's been to infrastructure around the region and how quickly that can come back. So it's not just oil, as you know, it's natural gas, it's petchems, it's everything. And that has this ripple effect across the planet because there is no country on Earth that is not very, very dependent on energy and all the thousands of products that come from oil and natural gas and so on and so forth. So it's having a ripple effect everywhere.
Yeah. At the same time, and this is a parallel track because the U.S. have tried to really make it be a parallel track. Lebanon-Israel, second round of discussions at ambassadorial level yesterday in D.C., and as actually, President Trump spent the time with both of the representatives of Lebanon and Israel, we got an extension of the ceasefire. Where do we go from here?
Very hard to tell because you've still got this fundamental problem that it's clear that the government in Lebanon, and by government I mean government ex-Hezbollah, really wants a settlement, but they don't necessarily have the power, that is both physical as well as other ways, in order to disarm Hezbollah and get that kind of détente. So it's very hard to see a way forward. I know there's been discussions about what aid other countries could possibly bring to that problem. But it's a positive that they've extended the ceasefire, and we shouldn't lose sight of that. It was a difficult one to do, I suspect, but the solution isn't necessarily there just yet.
Yeah. Stuart, thank you so much. Stuart Livingstone-Wallace. Let's turn to chips now. Intel shares soared as much as 20% in after-hours trading as the company delivered a blockbuster sales forecast that shattered Wall Street expectations. The upbeat outlook signals that the long-struggling chipmaker is benefiting from the monumental build-out of AI computing. I'm joined now by Bloomberg Intelligence senior analyst Matthew Blocksem. Remarkable extended hours price action for Intel. What is their comeback plan here?
Yeah, good morning. I think there's a couple of things that are really helping here. The big thing is that as we enter the next phase of AI, that we're going from this era where all the investment was going into training the models. We're now moving into the actual kind of application of those models or inferencing. And as you move into that phase, a lot of Intel's kind of more old school products, CPU chips, and the main product is Xenon, coming back in favor because those kind of chips are much more well suited for that inferencing or that kind of application of AI kind of use case. And so they're seeing really big demand for that. That's what's kind of really driving it. The second part of the strategy which is a little bit slower to kind of evolve, but it's definitely showing signs of optimism, is their foundry business. So this is essentially where Intel basically be the kind of platform that other companies use to manufacture their own chips. And whilst right now their foundry business still largely relies on other parts of Intel for its custom, we are seeing signs that there's demand from other companies. In particular, Elon Musk said he's planning to use Intel as foundry capabilities in his own kind of chip manufacturing venture. So I think encouraging is all around. Obviously, the CEO also did a huge amount to shore up Intel's balance sheet, and that also seems to be paying off. And they announced plans to buy back part of a factory that they'd bought, that they'd sold because the balance sheet was so weak.
Yeah. Okay, a positive story for Intel. Not the case for Microsoft and Meta. Both of those big tech giants have announced significant job cut plans. How did they get to that point?
Yeah, that's right. So I think it's about 23,000 jobs across the two, skewed towards Meta, which is a combination of about 8,000 or so job losses and 6,000 or so vacant roles they won't fill. I think, honestly, this is largely a reflection of perhaps overhiring through the kind of post-pandemic era. You know, the kind of positioning this as a need to kind of right-size the business and reduce costs in parts of the business to kind of fund the huge growth and investments they're both putting into AI. So I think it's a kind of a layered story. It's easy to kind of say, oh, you know, this is kind of AI and it's having an impact on net workforce. I think this is a bit more a legacy of overhiring from a few years back.
Okay, and let me ask you about SAP as well, a European software giant, reaping the benefits of the AI boom. What did we learn from their recent earnings call?
Yeah, another old school company that's having a bit of a comeback. So yeah, I mean, SAPs have been under a lot of pressure. This is one of these software companies that people have feared will get displaced by new AI rivals. And actually, the results they announced, you know, show some encouraging signs that their own pivot into AI and upgrading their own software suite for AI capabilities is starting to get some traction. They talked about 25% year-on-year growth in their order book. Which is in line with market expectations, but I think people were worried that perhaps that would be continuing to shrink, and some positive signalling from the CEO that companies are starting to buy their AI upgraded suite of software, and that's important because they'll need that to defend from competition. There are still some question marks, and in particular, it's about their pricing model. Historically, they've been charging people on the basis of subscription to a cloud service, you know, largely an all-you-can-eat service. Now they're thinking with AI, they're going to shift to a consumption model, and I think there's a lot of question marks about how customers are going to adapt to that and whether that's going to be successful for them.
Bloomberg Intelligence Senior Analyst Matthew Bloxham, thank you so much. And SAP CFO Dominic Assam will be on the opening trade at 7:30 a.m. London time today, so do not miss that. Well, still ahead from the center of the world's most important car market, we'll get the latest from the Beijing Auto Show. But first, EU leaders open the door for Ukraine to join the bloc. We're live in Cyprus next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Estonia's prime minister says there is no alternative to Ukraine's full membership of the European Union as the bloc's leaders gather to discuss closer ties with the war-battered nation.
Our position is that we support Ukraine in European Union because, to be honest, there's no other way. Ukraine belongs to Europe and Europe is stronger with Ukraine.
Bloomberg understands that EU leaders have signaled that preliminary conditions are in place for Ukraine to begin the first stage of the membership process. Our chief Europe correspondent, Oliver Crook, is in location in Nicosia. So talk to us about Ukraine's accession process into the EU. It seems to be gaining momentum here.
Yeah, Zelensky really arrived here in Cyprus riding very, very high. You'll remember there was that 90 billion euro loan that has been blocked by Viktor Orban for a number of months, really putting into peril and into question the future of Ukraine. Zelensky has referred to that money as really a lifeline, a matter of survival for the nation. And that was this week basically put into motion. Now the Ukraine will get that 90 billion. That means that their budget will be largely funded this year and next year, and sends a very strong signal to the Russians. There was also the 20th sanction package that was now also approved. And now there's discussions happening about the 21st sanction package. And we should say that despite the fact that Hungary is a relatively small nation, about 9 million people, that the sort of disappearance of Viktor Orban at the European level makes a huge difference for the future of Ukraine. And as you say, Jumana, now there's a very active and a very serious conversation about having Ukraine join the European Union. This is something that Viktor Orban really violently opposed. It was really campaigning on in the election campaign, but it's something now that they can take more seriously and have real discussions about. There are still some debates about how to execute this, what the timeline could look like. I spoke to some of the Ukrainians who are negotiating this a little earlier this week. Their timeline is, I think, very, very optimistic by anybody's standards. They'd like to join by next year. There have been discussions of potentially a sort of lower tier membership to the European Union, associate membership. That's something that the Ukrainians have really rejected, but it's about sort of beginning the negotiations formally. We understand now that the Europeans are open to doing that and trying to accelerate the timeline a little bit, which comes with a lot of different sticking issues, but this is something that now can be realistically envisioned by the European Union.
Okay, Oliver, that's Ukraine, but then also there was talk about the energy situation in Europe on back of the Iran war. What are some of the measures that are being discussed to deal with the energy shock?
So some of the measures that the Europeans are proposing at the European level is trying to sort of encourage nations to look at the sort of taxation system in terms of energy, in terms of fossil fuels, that sort of thing. At the EU level, they can do a lot of technical things with the ETS, which is the emissions trading system. We'll get into the details about that. That effectively functions as a carbon tax, ways to reduce that, ways of suspending or sort of delaying state aid rules in order for nations to be able to do more to support themselves. But we're not at the situation now, Jumana, where we're sort of the break the glass moment where there's all the emergency measures being rolled out. You'll remember that after the invasion of Ukraine, when those gas supplies were completely halted over to the European Union, they were talking about gas price caps. That is not something that's being discussed at the moment. I think there is still quite a bit of wishful thinking at the European leader level, not really wanting to imagine what would happen if this war goes on for another, say, 6 months, 12 months, 18 months. Then you get into real sort of crisis territory. The hope is really that this will be resolved in the next couple of weeks and months. But if it isn't, I have not heard a very comprehensive strategy for how to bear those issues through into the future. So that's going to be one of the conversations we're going to be drilling down in with some of the leaders that we'll be speaking to over the next couple of hours. But we're not yet quite at that emergency break the glass moment. The question is, when do we approach that moment, and what will the Europeans do?
Bloomberg's chief Europe correspondent Oliver Crook in Nicosia today. Thank you so much. Well, Oliver will be speaking with the Lithuanian president later today on the sidelines of the EU leaders meeting. Don't miss that interview with Gitanas Nausėda at 10:15 a.m. UK time. Well, coming up, as oil heads for its longest string of gains since the start of the war, we'll explore the impact on inflation and next week's central bank decisions. There are 9 of them. All right, that's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Well, we are in the middle of European earnings season, and let me just bring you some of the headlines coming through from Volvo. First quarter adjusted operating profit has come in at 12.17 billion Swedish crowns versus 11.59 billion estimates. So it is a beat on operating profit. And in terms of the sales numbers, though, the first quarter net sales have actually missed versus estimates. So the net sales figures have come through at 110.8 billion Swedish krona. The estimate was 112.15 billion as well. And just in terms of the commentary, the CEO says they saw good order intake, low cancellations in the first quarter. He says that the first quarter performance has been good across all business areas, have maintained their earnings resilience despite the lower volumes. And truck demand in Europe continues to grow gradually. Truck orders rose significantly in North America. So those are the figures that are coming through from Volvo today. All right, let's go back to energy markets. Brent is up above $106 a barrel, with the Strait of Hormuz remaining effectively closed. Let's get more on the wider market impact with Van Ram, cross-asset strategist at Bloomberg MLive. I guess, Van, I want to ask you here, is there a broader market impact? Because from what I see, oil is doing its own thing, and equities are telling you a completely different story these days.
Morning, Jumana. I think there has been a complete bifurcation in the reaction, as you mentioned. I think that, the bond markets have reacted pretty vigorously, as you know, particularly in the Eurozone and the UK, where front-end rates have just spiraled and factoring in many rate increases. But if you look at the equity markets, basically they've shut it off. And part of the reason, I think, is the fact that if you look at the underlying earning strength, it is a picture of resilience. In fact, I paused the fair value for NASDAQ 100, and what it shows is that if you discount back the cash flows accruing to NASDAQ based on its historical compounded annual growth returns in earnings and in dividends, what you see is a fair value of almost 30,000. And which is kind of underpinning the resilience in NASDAQ 100. Yeah. We haven't seen it really fall. And I think that, as long as earnings are continuing to be buoyant, I think the markets will shrug off what is happening in geopolitics. If earnings are the coupon that ultimately matter for investors, and if that coupons are good enough, then yields will compress and bond and equities will rally more.
Okay, so markets can shrug off what's happening in geopolitics. What about central banks? We have so many central bank decisions coming up next week. Are any of the majors going to be indicating they may hike into this inflationary shock?
I think that the European Central Bank is going to say they are going to be vigilant. They are not going to hesitate. But I think that, and the Fed is going to basically say that they are comfortable with their forecast that they put out in March. But to me, the two more interesting central banks are going to be the Bank of England and the Bank of Japan. And I think that the Bank of Japan has been trailing the neutral rate for a long time now. Even before the war started, they were behind the curve. So are they going to show a willingness, an increased willingness and a sense of urgency to raise rates, to quell inflation? Japan is overwhelmingly reliant on energy supplies from abroad. So I think that it's a huge energy shock and an inflation shock for them. So is the Bank of Japan willing to raise rates at a brisker pace? If not, I think that the yen will fall and JGBs already under pressure will sell off. As far as the Bank of England is concerned, we have heard several times from Bailey that he's not willing to raise rates as much as the markets were factoring in. But, if you see what has happened this week, Jumana, the markets have added one more rate hike to the BOE equation by the end of this year. And that is because of the numbers that we got in PMI yesterday. But regardless, if you look at inflation swaps, they are pricing around inflation around 5% in 1 year. That's alarming. The BOE has been missing the inflation target for the better part of 5 years now. So it would be very interesting for traders to hear what the Bank of England has got to say next week.
That's a lovely setup for us as we head into a really pivotal week for central bank decision making. Van Ram, thank you so much, cross-asset strategist at Bloomberg MLive. Well, coming up, as investors remain cautious heading into the weekend, we'll get the take of Emma Wool, Chief Investment Strategist at Hargreaves Lansdown. That's coming up next. This is Bloomberg. Live from Dubai today, this is Bloomberg Daybreak Europe. I'm Jumana Brisecci with your top stories. Oil heads for its biggest weekly gain since the first week of the war as Iran keeps the Strait of Hormuz closed and U.S. forces board a supertanker carrying Iranian crude. Intel shares soared 20% after hours, powered by a blockbuster sales forecast that smashed estimates. But Bloomberg learns Meta and Microsoft are planning as many as 23,000 job cuts to fund their AI plans. Plus, joining the club, we're told that talks on Ukraine's accession to the European Union could get underway in the coming weeks and months. Let's get you up to speed on these markets. We have some cautiousness as far as the S&P is concerned, but still on track for its best month since 2023. 80% of the S&P companies that have reported so far have beaten expectations on earnings. So it is a very robust earnings season so far. Nasdaq up 0.5%, keeping a close eye on Intel there. It is up 20% in extended trades. So chip makers and tech continue to power the performance here. European markets, not so much, leaning towards the negative, down 0.6% as we head into the European trading day. And of course, taking note of those weaker than expected PMI figures that came through yesterday. Flipping over, let's talk about Brent, though, with the ongoing situation around the Strait of Hormuz. It's still effectively shut. It's still dangerous. 105 is where we are at. The big figure for Brent, up 0.3%. For the week, we are up 17%. So it has been a very strong week in terms of oil performance. But again, a lot of uncertainty about where we go from here geopolitically. The USD up 6 basis points, but is on track for a 0.6% gain this week. Its first weekly rise in this month, so for the month of April. And then 10-year yields in the U.S. sitting at 4.33. As we could talk about the continued curve flattening in 2s and the upcoming Fed decision next week. Time now for your front page news. The Financial Times reports that Poland's prime minister has questioned whether the U.S. would be loyal to its NATO commitment to defend Europe in the event of a Russian attack. El País is reporting that no one is safe in the Trump administration as the Navy Secretary John Phelan is fired after the departure of 3 cabinet secretaries in recent weeks. And the Wall Street Journal also leading with the dismissal of U.S. Navy Secretary John Phelan. The Journal reports that Phelan sat in the lobby of the West Wing for more than an hour on Wednesday night, waiting to see if his longtime friend and neighbor, President Trump, would save his job. But he would leave disappointed. And you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, Terminal subscribers can go to DAYB Go. Well, it is earnings season, so bringing you now some earnings coming through from Eni. We have the first quarter adjusted net profits coming in at euro 1.3 billion versus estimates of 1.51 billion. So that is a miss versus expectations. However, they have announced that they are boosting their share buyback for 2026 to 2.8 billion. So even though we had a bit of a miss on the adjusted earnings, we are getting news of this share buyback as well. And as you can see, in line with most other energy companies, it has been a strong year so far, up 44% for the stock. In terms of other comments that are coming through, first quarter production, 1.8 million. The estimates for 1.78 million. And that is it so far. So share buyback is a theme, and then a bit of a miss on adjusted net profit versus expectations for Eni. Well, the Middle East ceasefire and rebounding markets have reignited investor appetite for the carry trade. That's where investors borrow money in low-interest currencies and invest where they're high. With volatility collapsing, traders are betting that exchange rates won't suffer the kind of abrupt swings that derailed the strategy in 2024. Paul Dobson, our Asia Markets executive editor, joins us now. Talk us through the types of carry trades that investors are putting on, Paul.
Yeah, hi there. Good morning. A few of the biggest investors that we've been speaking to up and down the street have been talking about this strategy recently. Borrowing cheaply in FX markets and then targeting higher yielding currencies to pick up the difference in interest rates between the two, and with a little bit of hope maybe for some appreciation of your currency long on top of that. They've been confident to do it because that volatility, as you were talking about, implied volatility in currency markets has really subsided. People have been expressing optimism that the war in Iran will at some point be concluded, and so that will give markets some sort of a relief. But it's a selective carry trade. It's not just looking for high interest rates, but more looking for countries that are energy producers and therefore shielded to a certain extent from the shock. So thinking about, Latin American currencies in particular are in vogue, those with commodity exports, and using the yen or similar very low yielding currencies as funding, so the short in your trade. And I think that that's quite interesting. We have the BOJ meeting coming up. It also sort of testifies to the idea that the market is expecting the BOJ to remain on hold, and so to keep the yen weaker relative to those stronger energy exporting, high yielding currencies.
Yeah, I mean, the assumption here is that underlying volatility is going to stay low, as you were just talking about. Are investors being perhaps a little overconfident? You know, we saw a massive upheaval in the carry trade in 2024.
Well, exactly. So your bet is on the war situation remaining under control. I would say that so far this week, while we've had that fragile ceasefire continuing, more or less, we've also had little signs of progress in terms of the talks between the US and Iran, at least in sort of in the public domain. And I think that people are starting to lose a little bit of confidence. If you look at crude oil prices this week, they've been steadily strengthening. It's going to be the biggest percent increase for crude oil since the first week of the war. So that talks to this idea that, you know, the tightness in global markets is getting ever more extreme and more extended. And at some point, you know, that could erupt into some sort of bout of market volatility if, and it's always the big if we don't get some reassuring tweets from Trump or we don't get some signs of progress sometime soon.
Paul Dobson, thank you so much, our Asian Markets Executive Editor. Well, for more on the markets, I'm joined by Emma Wall, Chief Investment Strategist at Hargreaves Lansdown. Emma, I actually want to start with the PMI drop that we had yesterday. Specifically, maybe let's just start with the UK before we talk about the Eurozone figures. I was surprised to see the jump in the UK PMI numbers yesterday. What do you point that down to? And would it suggest that perhaps consumption is being brought forward because of the expectation that this war actually could go on for longer than expected?
Yeah, I think you're right to be surprised. We're seeing a lot of mixed data, the macro data and the market data over the last 6 weeks. And it really speaks to that consumer confidence and business confidence that has been so fluctuating week to week. Much as we've seen in the markets, you know, the sort of weeks which will include kind of intraday rallies and then fall off by the end of the week. So actually, too, we've seen consumer and business confidence do the same. If we look at the investor confidence survey that we do with our own clients and some of their trading patterns, we've seen actually risk on, risk off really fluctuate. And we think we're seeing a similar attitude within consumer spending, which is why we're seeing this kind of rather mixed picture in macro news.
Yeah, so Bank of England, if you look at what is priced in by the end of this year, 2 rate hikes, is it likely that they follow through with that, do you think?
Our house view is that it won't actually happen. I mean, we completely understand some of the volatility in the forecasting. You cast your mind back over the last 6 weeks at different times. The Bank of England has been sort of forecast to be cutting twice this year, then holding rates through the year, and now hikes are back on the table. And the inflation print this week does, you know, support the concept of hikes. But actually, we think that the Bank of England holds rates next week. You know, rates continue to be the kind of dominant theme when thinking about markets, along with sort of AI and tech. But next week, we very much expect the Bank of England to hold rates. And there's a couple of reasons for this. There's been lots of parallels made between what's going on now in kind of oil markets and the inflation picture and what happened when Russia invaded Ukraine. But ultimately, the monetary policy position where you're starting from is very different. You know, we are still above neutral rate here in the UK at 3.75. And so actually, we do think there's some cushion left to absorb higher rates before the bank would have to make any kind of move. That said, we don't expect, you know, the sort of the cuts to be necessarily coming in later this year that we were expecting earlier in the year. But we do think that while the war is, you know, in this kind of acute phase, Bank of England does hold rather than hike.
Okay, let's pivot and talk about the Eurozone numbers. A real surprise to the downside, signaling, again, a lot of downside risk to economic activity. At the same time, inflationary pressures are emerging. Would you say that the European economic outlook is very closely linked to what happens with energy prices from here?
Absolutely, and we know that compared to sort of the oil shocks of the 70s, the global system is very different. It's much more kind of heterogeneous rather than homogeneous. You can take the US oil shocks in the 70s. They were a net importer of oil, and now the opposite is true. But the sensitivity for Europe and indeed the UK remains. So much of our supply chain, so much actually of kind of the industrial sort of old economy still drives a lot of growth. Therefore, the dependence on energy prices and the sort of the link to global prices is far more sensitive. That said, rates are already below neutral for the ECB, and so actually kind of cutting further from here would be against kind of expectations.
So, putting it all together in terms of investment strategy, is it fair to say that if you want to outperform, you have to somehow be exposed to this AI trade that's once again picking up momentum, semiconductors and so forth, and therefore essentially be exposed to the US market more so than others?
Yeah, it's a good question, because actually the two themes that have dominated kind of Q1 have very much just been AI and the oil price. And they do different things to the market. Sometimes it feels at odds with one another. But next week, we think will be really pivotal in terms of, you've got 4 companies releasing their results within sort of 24 hours of one another. And within that 24 hours, that makes up 25% of kind of market cap of the S&P 500. I mean, it's the scale of these companies and what each of them individually can do to move the market and to move investor sentiment is really important. But of those 4 companies that are, announcing next week, AI is so intrinsic to kind of market sentiment and expectation, and will really tell, how the market reacts. And we do think there's the haves and the have-nots here. Obviously Meta and Microsoft have announced job cuts over the last day. But actually, we do think those two are two of the best placed kind of the Mag 7 to benefit next week for different reasons. But we do think very much that next week will be all about not just the names themselves, but how they are, incorporating AI, whether that significant spend that was announced last year is actually flowing through into revenues.
Emma, thank you so much. A delight to chat to you. Emma Wall, Chief Investment Strategist at Hargreaves Lansdown. Well, returning to the EU and the prospect of Ukraine joining, Bloomberg's Oliver Crook has been speaking with the Estonian Prime Minister.
Our position is that we support Ukraine in European Union because, to be honest, there's no other way. Ukraine belongs to Europe, and Europe is stronger with Ukraine.
And thinking about the 21st sanction package, what should that contain?
Our message is that this kind of full maritime services ban, because, to be honest, Estonia has been leading or being with other countries with the fight against Russian shadow fleet. This is delivering a little bit less than half of Putin's war chest money, and also with Russian assets. So probably getting them off track with getting new money, fresh cash for waging the war, that probably would be the first thing. And second thing, also added to that, also the Russian ex-fighters banned from Schengen area and European area.
And thinking also about the energy crisis, this obviously is in front of mind for a number of people. How severe do you judge this crisis to be? Because it seems that my impression is that there's a lot of wishful thinking in Europe, that there's a lot of hope that this is just going to not be a problem a few months from now. However, if it is, we go into the winter and we have gas shortages, we have all kinds of shortages, it becomes very severe. How seriously do you judge this issue?
To be honest, the longer the conflict lasts, and the longer the influence will be. The influence will be on many tracks. The first one is probably immediate gas prices in the gas stations. That will be felt. Everybody will be questioning about the excises, taxes and so on inside the countries, because it's on the supply side. Second one is which will be impacting Central Europe and Eastern Europe at the middle of the year and at the end of the year is the gas prices, because we need it for heating and energy production when the prices are up and so on. And the second track, which probably will be affected a good way, in every bad thing there's also good side, that renewables and the production of renewables will be going up. So things happening in Hormuz are probably right now the booster for renewables.
But that's a much sort of longer term vision. For example, in Estonia, the last quarter there was a slight contraction. Do you think that it could cause, for example, a recession within Estonia?
Depends pretty much on Europe as a whole, because we are quite exporting nation, and we are depending mainly on our markets, for example in Scandinavia, Finland, Sweden and so on. Second thing is about the Euribor, which will be decided by central banks, because if the inflation will be going up, I would predict that central banks would not be in that kind of hurry that they were last time. But they will have to step up, let's say, at the autumn and so on to make also certain decisions.
The Estonian Prime Minister speaking with Oliver Crook there. Well, coming up from the center of the world's most important car market, we'll get the latest from the Beijing Auto Show. That's next. This is Bloomberg.
Yes, our cooperation with Volkswagen has been very successful over the past 3 years. Our first collaborative vehicle, the Volkswagen ID Unix 08, has already been launched this month. We are also working with Volkswagen on the next generation of vehicles based on the VEA architecture, which will soon be available for Volkswagen China and other sectors. In fact, the cooperation between XPeng and Volkswagen is deepening further. When we have more information to share, we will provide more details.
That was the CEO of XPeng speaking to us at the Beijing Auto Show. Let's head there now. Our chief North Asia correspondent, Stephen Engel, is on location for us. Stephen, well, the backdrop to this auto show is a lot of overcapacity in the Chinese auto industry. We know that there's a price war that's been going on, heavy discounting. What is the mood on the ground there?
Well, obviously, it's been a tough beginning to the year for the Chinese EV sector. Sales were down about 14% in March alone, and that was the third consecutive month of declines. But again, I think the car makers here who have loaded up their cars with fancy tech, so really connecting the mobile phone to the automobile has been the growing trend. And they've been having product refreshes much faster than legacy automakers in Europe and in the United States. So that's been driving demand. But again, that price war, because of the immense overcapacity, the capacity utilization rate at auto factories in China is hovering around 50%. So they can make many more than what they're actually selling. So that has driven the price down. So how do these car makers adapt to that? Well, they've definitely turned to overseas markets. And we've been hearing about this, and that's why there's this protectionist sentiment we know in the United States. We know there are pockets of that in Europe for sure. But again, the Chinese automaker, with its value for money and tech-laden products, are making significant inroads because exports accelerated, surged 140% to a record in March. They're going into Europe, where hybrids now, Chinese hybrids, make up 30% in Europe of that particular segment. They're going into the Middle East. Yes, challenged, obviously, by the war and the stresses there. But again, long term, they're going into the Middle East, they're going into the global South, they're going into South America and into Africa. So yes, it's been tough domestically, but the other trend is what we just heard there from He Xiaopeng, the founder of XPeng. They have that partnership with Volkswagen. We are here at Volkswagen booth right now, which has a 4.99% stake in XPeng, and they're going to be collaborating a lot with the Chinese technology, autonomous driving, and their engineering platforms. It's sort of like reverse partnerships. In the previous decades, it was all about the Western car makers coming into China to tap the potential here, and then the Chinese gleaning the tech from the Western legacy operators. The roles have been reversed now.
Stephen, thank you so much. And I can also vindicate what you were saying. I'm based in Dubai, and I see a lot of Chinese cars on the roads, to your point about a Middle Eastern market being a big market for them. Chief North Asia correspondent Stephen Engel at the Beijing Auto Show. All right, we're keeping a close eye on earnings, obviously. SAP, I just want to flag this to you. It's up 6.5% on Tradegate versus the Zetscha close. So this is in early hours of trading, already trading in very positive territory. And this after their earnings dropped yesterday, very solid, with the net profit increasing by 6% and their cloud revenue up almost 23 to 25%. So that is a beat versus expectations. And also just a reminder, the CFO will be speaking to our colleagues on opening trade in the next hour. So stay tuned for that interview. All right, plenty more coming up here. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Well, I'm going to bring you some charts that we've been looking at and tracking. Over the course of the last month, a massive rally in semiconductor stocks. And yesterday we were talking about the Philadelphia Semiconductor Index up 17 days in a row. And it's set for its largest monthly gain since 2000. So it really just encapsulates the amount of inflows we've seen going into that space throughout the month of April. But flip over, because as we're, peeling back now, but S&P did essentially reach new record highs this month. What's interesting here is the breadth has lagged the record prices. And actually that blue line is telling you that only about 58% of the names in the S&P have broken through their 200-day moving average. And what does this tell you? Once again, there is a concentration. Where is that concentration coming from? It is chip makers, it is AI, it is tech once again. So keep an eye on the breadth of this rally. And then flipping over, obviously, here we spent a lot of time talking about the energy impact of the war and the ongoing uncertainty around the Strait of Hormuz. And even though we continue to see upward pressure on oil prices, Brent is above $100 once again, up 18% for the week. What has happened is volatility in other asset classes has dropped. So you can see that quite clearly here. FX vol, rates vol, all of that has been dropping over the course of the last couple of weeks because the ceasefire is in place. So basically here, cross-asset telling you different stories. Energy telling you one thing, FX and rates telling you something else. Now, to access, search, and save all of the Bloomberg terminal charts used on this show and across Bloomberg Television, terminal subscribers can use the function CHRT TV Go. And a reminder, our main risk events to watch out for. In a couple of minutes' time, we get the UK retail sales figure, 9 a.m. UK IFO survey, and then 3 p.m. University of Michigan sentiment. And then the president of the IFO Institute, Clemens Fuest, is on the pulse just after 9 a.m. time. That's our show. The opening trade next.